What's going on, everybody? It's November 17th, 2022, Daily Log episode number 54. Today we're going to cover ES, S&P 500 futures contract, and what unfolded, what I was looking for in the morning session, and then what ultimately played out during the PM session. So I wanted to bring up the Telegram once again just to describe what I was thinking and seeing from my point of view. So in the morning session, if you looked at the actual morning log, I was talking about how these conditions are creating a lot of uncertainty on the lower time frames, but the higher time frames can act as a more better entry opportunity. And I actually had this thought a couple days ago, and then ICT confirmed it for me today. He actually tweeted during these, times when the lower time frames are being extremely manipulated, like you've seen in the past few days here, you want to resort to more of a intraday swing trading, one shot, one kill type of trading, which is something that I used to do and I'm still comfortable doing. I just prefer the lower time frame in the model just because I've found more success with it. But I think in these times, and I personally have seen that the higher time frame entries can be a lot better just because you're not getting stopped out by a few points and then price running to the overall objective. Example, yesterday we were looking for that sell side to be ran out, and there was just never really an entry, and then price finally ran through the relative equal lows there. So looking at the first post, I said ran at the sell side liquidity. We were looking for, I'd like a retracement a bit higher on lower time frames to short into the FEG below. So this is the 4-hour time frame. I was thinking that we could get down into the 4-hour fair value gap. I noted in the morning session log how we are tapping into the daily fair value gap, and if you go out to the weekly time frame, we were tapping into the bullish order block, which I forecasted from the beginning of the week. So that should all have been annotated on your charts. And the overall kind of narrative for the week was for us to look for the high to be ran out and short into the weekly bullish order block, and then see if we can get a nice bullish reaction off of that to go higher. So that's been the narrative all week. 2-minute time frame. This is right before maybe this is right after the open. I said I saw the bullish setup, but I'd rather short in these environments just because I hate picking bottoms, and this is picking a very low bottom. There was also a couple other things in US 100 and US 30 that I didn't like to go long, so I just stayed on the sidelines. This thing did run for a little bit, but if you were trying to long for 20, 30 points, you would have been stopped at a break even maybe. So, and then I posted the 30-minute time frame. I'm looking for a retracement back into one of these fair value gaps, and I said I would suspect the first fair value gap to play out if we do reach up into there. So I said note the bearish SMT. This was before the 30-minute fair value gap was reached into. So that's kind of the reasoning why I didn't really want to take the long setup. There was SMT divergence. I didn't really like it. The 1 hour BTC was my draw on liquidity. So 38.94 and 38.82, which I'll drop down into the 1 hour time frame. This is overall what I was looking for, but price just never ran into it, which is the reason why we take partials and protect ourselves. I was thinking that we could possibly get a run lower, but the reason being we were already residing inside of that daily and weekly higher time frame PD array. So it made sense why we did drive higher, but ultimately we did get a nice short setup. So I was looking for us to drive down into here, which this 1 hour would be inside of that 4 hours. So that was kind of the narrative in my mind going into the session. So if you look at the 30-minute here, there was this fair value gap as well. So I noted that one and then this one here. And somebody asked me today, because if you've been following me for a while, I usually like for these areas of interest to be hit and then wait for the model to form, the YouTube model. So once we get a displacement into that area, then I look for the lower time frame shift premium for value gap, then go short. But going all back to the beginning of the morning session, I'm more in a intraday swing trading type of mindset right now. Even though this didn't play out to a intraday swing trading take profit, it was still kind of my mindset going into it. And I didn't believe we are going to drive up into this fair value gap. It didn't make much sense to me. So if we drop down to a 15-minute, there was one here as well in the same area that the 30-minute was. So I was paying attention to that. And I was just watching lower time frames. And in my head, I wanted to post this because I think some people might have taken shorts on this, to be honest with you. Just because I was looking at it as well, but I just knew in the back of my mind that I didn't want to short here. It didn't reach up into a high enough premium on a higher time frame. So I'll cover that if you did take a short here. Definitely let me know, because this is a good example. I think this is really just more due to experience, but for me personally, when you're looking at a time frame that, or 1 hour time frame, 4 hour time frame that is dug so deep into a discount, like it's rallied lower all night, and then you're trying to short the very tail end of that, to me it just doesn't seem super high probability. I would need a higher time frame dealing range to be pumped up into a premium. So what I mean by that, if you look at like a 15-minute time frame, the dealing range high is here down to the low. So price hasn't reached up into a premium yet. So when you're looking at like a 2, a 3 down here, yes, we did displace lower. There is a shift on lower time frames if you're looking at it in that perspective, in that lens, to go short on one of these fair value gaps. But for me, I needed the 15-minute, 30-minute dealing range to be pushed back up into a premium before I really wanted to take shorts personally. That just seems way too low of a discount. So if you did take that, it's a good learning lesson. It's no big deal. I've made those mistakes before, so I just want to point it out in case anybody did. For some reason, this keeps playing out, but price pushed right up into that 30-minute for value gap, and I sold short there. Stop was above the high here, or the premium end. And I really like when price just quickly drives up into my area of interest. That's a good sign. If you haven't been around long with these concepts, I like selling in very bullish candles and buying in very bullish or bearish candles as well. So I sold short here. You can see, and I was targeting the sell side liquidity resting underneath there. If you played it out, we ultimately didn't get my objective, and that's perfectly okay. That's the reason why we take profits. So you can see here I took a partial. I took another partial as well. I didn't end up showing it, but it was right around 90% off the table, right around here. Especially after we retraced a little bit higher here. I knew in the back of my mind probably wasn't a good sign. We should have already taken out the sell side. So let me see on lower time frames, even if you wanted to wait for that 30-minute for value gap to be hit and then look on lower time frames to the model to form, I think there was something slight, if I'm not mistaken. Small little fair value gap there. And I think on the 5-minute, small little bearish order block came back up into it. So that could be your entry pattern to go short off the backbone of the 30-minute if you wanted to, but I was comfortable with the 30-minute for value gap to go short. Now, I'm very happy, or at least to see what happened after the AM session. I actually set a limit here and I took it off just because I was basically done for the day, but this was coming into the PM session. I just felt as if I was getting greedy and I just wanted to kind of kill that. I was already content with the profits made from here and yesterday, but I thought this was a really good high probability setup. The reason I'm playing out this fib like this, I'm looking at the 5-minute fair value gap here. And then if you take the overlap dealing range high to dealing range low, let me get rid of this real quick. You're looking for discount. So nice fair value gap resting in there. 15-minute resting in there. Note your bearish or bullish order block here. Down close candle. I think the 45-minute has a good example of that. And this is all off the backbone that we dropped into that daily fair value gap, the weekly order block. So there's a reasoning why, and we ran out sell stops here. So there's a reason why you would be wanting to go long and waiting for that discount. So price dips down into that discount, extend out the bullish order block and the fair value gap. Price is inside of a discount. You have your fair value gap here. Look at the body closure of it, closed above the discount low of that. So very beautiful. You would have been targeting the buy side liquidity, and then maybe some left open fair value gaps up here. I believe this ran for about 20 or so points. So even if you went, long at the equilibrium of that fair value gap, still ran right around 26 points. I would have took out at the buy side liquidity, or at least some partials. So I think that was a good model example as well. And that's, using higher time frame PD arrays and understanding kind of the narrative of where price is going on a macro scale. For the rest of the week, so we only have, obviously tomorrow, I'm hesitant to say that we're bullish just because we're running into Friday. If this was happening midweek, I would be screaming longs. Logically, it makes sense. I really like the close of the daily candle. We closed above the low there on that candle, the fair value gap. We also tapped into a breaker. If you extend out this high, this last up close candle here, we rejected off of that as well. And then that also aligns with the weekly bullish order block. So to me, it does make sense to continue going higher, but with Friday tomorrow, they could just send it sideways. We would need to close above this high or this low here of this fair value gap. There'd be a strong closure above that, and then looking for higher prices to potentially take out the high there at 40.51. So that's what I'd be possibly looking at tomorrow. But if we displace lower, that could be that could be a reason. The reason why I'm hesitant is because we haven't tapped into this 4-hour, and we're kind of retracing back up into a premium relative from the dealing range high to the dealing range low, tapping into a bearish PD array. Same with the 1-hour. So it does make me slightly hesitant, but if we close above that 4-hour, then we could, send price higher. So I think that's going to be it for today. I will touch base with you guys tomorrow morning. Until then, good luck and good trading, everybody.